The housing market has been absolutely crazy across the US over the last year. We've all seen it. Average house prices have gone up from $320,000 last year to $360,000 this year, an increase of 12% across the entire country. But what's even crazier, in certain areas, prices are up by over 20% within a year. We all know that this is crazy, it's reminiscent of 2008, but a lot of institutions are telling us that it's normal and there's nothing to fear. We need to look at what's actually happening to see if this is a bubble and if it's going to pop. Redfin CEO Glenn Kelman recently went on CNBC and told us that the market is already slowing down. There are other signs that this crazy housing market boom is over as well. So I'm going to play his clip quickly here, then explain why the housing market isn't looking so good and why you might want to steer clear for the time being.
Joining us now to talk about this and the broader housing market is Redfin CEO Glenn Kelman. Glenn, thanks so much for being here with us today. So why do you think the demand for second homes is falling? I mean, there's still lovely homes out there to be had. Are the prices just pushed higher because so many people were chasing them? Is it going back to work? What's going on here?
Some of it is prices have been through the roof, and some of it is that people have just gotten back to their regular lives. So people have gotten vaccinated, they're going out to eat, they're going shopping, they're doing everything that we haven't been able to do for a year. So for a couple of weeks, housing has been hot instead of blazing hot. And it's actually probably good for the market. We've been running too hot for too long.
Glenn, part of the consumer sentiment numbers that came out today, University of Michigan's report, showed that those saying it was a good time to buy a home plunged. Now, I suppose that could just be the price effect. And basically, people have sticker shock or feeling as if the market's so tight that they're not at an advantage in trying to buy. But what's your takeaway on that as to whether it could persist in terms of buyers feeling as if they just don't want to participate in this market right now?
Well, at least some of the fatigue isn't just due to prices. It's also due to there's not much good to buy. So people come onto our website, redfin.com, and they can't even see a house that they love. They're looking further and further afield to find a home that they can afford. So a lot of it is just that they don't want to participate in these bidding wars. They're tired of getting blown out. We've had so many buyers say, I'll be back in a month or two, but I just need to take a break because the psychological toll of losing weekend after weekend, offer after offer, has really been hard on some of our home buyers. It's been hard on the agents too.
Absolutely. And that is a really hard thing to lose out in those bidding wars. I've been a part of those, and it does sort of crush you a little bit psychologically. Of course, along with everything else we've got going on in a pandemic. I want to follow up on one of your previous points there, Glenn, where you talked about migration will soon be happening to lower tax states. Are you not seeing that happen already?
Oh, I misspoke. It's on like Donkey Kong, baby. It's been happening for many years, but as soon as the pandemic started, we really started seeing it happen in full force. Home prices could go up quite a bit in Idaho or Ohio or Wyoming before California would really be scared off. So I think that is why the market has continued to be strong. Lots of people are free to move about the country.
So there you heard it. Redfin think that the market is already slowing down. People are feeling uncomfortable buying houses at these prices, and they're feeling uncomfortable seeing houses go for $80,000 over asking price with no contingencies. Most people think it's a bad time to buy a house, so clearly the price is going to go down. But why? Well, interest rates are ridiculously low right now. That means that if you're buying a house with a mortgage, which the vast majority of people are, then your costs of borrowing are going to be lower than they've ever been. This encourages people to buy houses. If you can borrow at 2% interest a year on an asset that's going to grow at 2% a year, while investing the rest of your money in the stock market, which will grow at 8% a year, then put simply, buying a house will make you rich. That's the simple truth for why the housing market has blown up recently. Interest rates being this low means everyone wants to buy a house because they believe it will actually make them money in the long run. The problem comes when interest rates rise. If we see interest rates rise by even a few points to 5%, say, which isn't even that high when we look at historical averages, then suddenly millions of people wouldn't be able to afford their mortgage. Their monthly repayments would be too high and they would have to downsize. People buying new houses wouldn't be able to borrow as much either, so they would be forced to consider cheaper homes. This would without a doubt force prices down. If interest rates rise, the housing market will fall. There is no way around this, no matter how much nonsense the government and certain parts of the media throw out there. But the next thing they'll say is that interest rates aren't going to rise because the government doesn't want to increase the cost of borrowing. But the government might not have a choice. Year over year inflation was 5%. Last month's inflation was 0.6%, which when annualized is over 7%. If this trend continues, and there's a very strong chance that it will, the American economy is going to overheat, and inflation will continue to rise. The government will have no choice but to raise interest rates, to try and cool the markets down, to stop people from taking on debt, to stop companies from investing in themselves, to prevent hyperinflation from occurring. This would be catastrophic for anyone who has recently bought a house at an inflated price that they can only just afford. It would be bad for people who have bought a house at pretty much any price, but it will bring prices down back to reasonable levels where people can once again actually afford the housing they live in. If you're in a position to buy a house soon or even thinking about it, then this is something you really do need to consider. You need to look at the risk that you're taking on. You need to think about whether or not you might need to sell the house in a few years, or if you earn enough and the mortgage repayments are small enough that you might be able to weather the storm until prices recover. You need to consider the interest rate on your mortgage and how expensive your repayments would be if interest rates rise to, say, 5%. I hope that you do look into all this because it is looking so reminiscent of 2008 to me, and we all know how badly that turned out. Thanks for watching. Until next time.